cycle on this.
I'm chiming. Thanks.
Yep. And yes, I'm going to leave the meeting. Well, here we go. We're going live. YouTube's coming up, and man, I'm loving these back-to-back events. They are dead sexy. They are lots of fun. It makes the brain engage. And closing out the week with events, I cannot say more about all the fun that we can have when it comes to this. And there we go. We got Riley coming in to join the party here right away as well, looks like. But we are going to be going live in a moment. And as always, because we are here, we are now smack dab in the middle of a Syndicate Talks Season 3, Episode 4 with my brother, Paul Falkowski, the monarch himself. And today, invest or die. If you like the title, love the title. You got to figure out what to do with your money. You'll be able to take care of this stuff. But for a moment, set the table for you, set the premise for you. Syndicate Talks formed at the beginning of the pandemic, bringing accessible business education to, first of all, our members inside of Syndicate. And while I'm sitting here and I'm ranting and raving, I've realized that I'm going to make sure that we can spotlight, of course, our principal speaker.
Ooh.
And myself. There we go. That way it's going to show up on YouTube appropriately for us right now. But to make business education accessible, first of all, to our members, and then to the general public for free. Idea behind a Syndicate Talks to put the best business practices, ideas, designs at the forefront and give people free information so that they and their business can continue to thrive and grow. Business education should never be as challenging as it is right now to find. And so we are giving of you. So today we're going to be bringing Paul to the forefront, who, if you haven't found out, he is in a book titled, and I want to make sure I get the title right, The Top 75 Canadian Entrepreneurs, the top 75 entrepreneurs in Canada. No, here we go. He's going to show you the cover of the book right now that he's in. Bring it there. 51 success stories from Canadian real estate investors. This book, bestseller, was out there. It talks about the people that were movers and shakers in real estate. Paul turned himself into a multimillionaire and then retired at 33 and has come back out of retirement. First of all, to bring that to the forefront, real estate has always been a place to take and share information, ideas, and suggestions, but where the critical ability to fail is so high and it is so expensive that you have to get it right every time you do a transaction in real estate or you're going to get punished. And now, in what is the digital world, part of that real estate, the same mindset and mentality is moving forward to where? Cryptocurrency. Mitch, how do you go from real estate to cryptocurrency? Well, cryptocurrency, there's only a finite amount of it. Every single one, we look at Bitcoin, we look at Ethereum, we look at any of them, any of the dog coins that are out there, Dogecoin in the house. There's only a finite amount, much like there's only a finite amount of land, real estate being available out there. The value of it is based on the perception of the marketplace, et cetera, and the conditions under which you buy, sell, transact, hold on to it, or discharge it are appearing to follow more of the rules, in my opinion, more of the rules that you would see in real estate as it is the rules that you see in the traditional investing, which is why many of the banks, trading houses, et cetera, don't quite seem to know what to do with it yet, because it is far more akin to real estate. You can invest a lot of money, you can invest a little money, you can invest with your friends and your family, you can invest with a complete stranger, you can buy and sell at the drop of a hat, you can make an enormous pile of money, or you can lose an enormous pile of money in a matter of hours and days, even if you feel that you've done everything right. So setting the table from there, Paul, welcome aboard Syndicate Talks. I'm going to do a little button pushing for a moment. If you can give us the 30-second, 1-minute bio, where you started from, where you're at right now, and then we're going to dive right in to this idea, this concept of real estate, cryptocurrency, more importantly, and understand once more, seek appropriate advice from experts like Paul, but seek appropriate advice, do your diligence, check your boxes. I don't need to say that anymore, because when you hear Paul talk about the way he started in real estate and how he looks at crypto right now, you're going to realize the amount of diligence that goes into this. Is not shoot from the hip. This is methodical, it is clinical, and it is going to give you a great deal of resources to be able to advance yourself if you're willing to put in the time and energy. Paul, tell us a little more about yourself.
I guess starting in the Wayback Machine would be starting in banking, worked my way up to a senior lender and investor in one of the major banking institutions, and then was introduced to real estate investing. Partnered with somebody that was in the industry already. It's always easier to learn from somebody that's actively doing it, putting the nails on the wall and locking the doors at the end of the night. And, I didn't have any money at the time, so I had to go and find the money. And through relationships, was able to do that. And, first year, 1 property. Second year, 3 properties. Third year, 11 properties. But it was through hard work, diligence, and continuing to push the envelope on that. So it was fortunate to buy over 165 properties. I had 80 rentals, apartment building, built 2 commercial bays, and then started to look at how the economy was turning, because everything has a cycle, and started to get out in 2007 through 2008 and first part of 2009. From there, pretty much retired. And then dabbled with other businesses. I went into agriculture and lost my shirt, lost a partnership, and started to get back into the real estate side of things and mentoring and coaching, and came into Mitch's ecosystem. I had coached with Mitch before for about 2 years, and now we're working together in MCC, and I'm a business coach along with Mitch. So that's the short story.
All right. So Paul, we're a short story, and it's a hell of a short story, because not necessarily everybody packs that much stuff all into one place at one time. So having started out like you did, of course, it sounds like you hit a couple of key indicators. What really was the impetus or catalyst to get you started into there? And what was one of the first steps or one of the first mechanics? I heard this answer. I've heard this answer from you before a number of times, but people don't know what they don't know, right? In our practice, in our world, we talk about unconscious incompetence. You don't know what you don't know. You don't even know that you don't know, and it can hurt you. And then you get to conscious incompetence, which is, I know what I don't know, and now I can start to do something about it. Then you get to conscious competence. So at least I'm practicing. And then you get unconscious competence. Paul did not go from working at the bank, which likely taught you nothing about real estate, really, to knowing when to pull the trigger, transact out, and to be able to educate and mentor other people. So what were some of those first steps that you had to take? And what's something that people have to consider for their own first steps moving into just traditional real estate? Because property ain't cheap, even when it's cheap.
I think first and foremost is mindset. What did I want? Did I want something more? All I knew is that, banking was rich with experiences and understanding how people handle money and the cycle of money, and how we can convince ourselves that, this is on sale, so I should get it. In the end, I'm going to save money, but in reality, you're not. A lot of it is keeping up with the Joneses, and it's the lack of financial education that we don't have. We're not taught about a lot of these things. So I was very fortunate. It was a very rich experience, learning through my clients more than anything else. And what the bank taught me was how to read documents, and also become like a homeschooled lawyer to read all through that stuff. So I was good at reading documentation and checking off boxes and getting signatures, and trying to provide for my clients. But for me, it was more of a context change. I had to change the frame, or change the way I was thinking, and think, do I want something different? What can I do? What could I do? And where do I want to go? And that was the burning question for quite a while, until it was an actual client of mine who came into the bank, and I believe he had about 30 properties at the time, and I had never seen anything like that in my entire banking career. And so after doing, the business work, being professional, I asked him, do you mind if I ask you a personal question? And he said, no. I went, how the hell did you get 30 properties? Like, this is blowing my mind. How did, what, who, when, where? Wow. I'm just excited to learn more on that side. And he had a smart ass answer, which was, well, I just bought them one at a time. Well, really didn't answer my question. So, from that, he was, what he told me was, no one had ever asked him, through all the years that he'd been dealing with all of the different institutions and dealing with people and buying property, renting them out, I was the first person to actually ask. And, I think that's important to go forward is asking. People that are passionate about what they do love to talk about what they do. So, I was fortunate to be able to get this gentleman's time because it was very busy, lunch, breakfast, whatever he wanted. But I also approach it with, how can I help him? What can move him forward? And, at the time I could get a mortgage, I could get approval at the bank, but I didn't have the down payment. So I approached him with an opportunity. Would you like to buy a house? I can get the mortgage, but I'll need the down payment. And then that started a really good relationship because that added to his portfolio for a small down payment. And there was absolute peace of mind because I was running it. So if there's anything that was going on with it, my problem and my issue. So that fostered that relationship. And I was able to, eventually get out of the bank and start learning from him, but also being in a group of like-minded people who were interested in real estate, like-minded people who had some properties, and being able to learn in that particular environment. So it really is having a mentor, having a guide, having a coach. And that's when I started my reading journey. I really didn't read anything outside of what the bank was telling me. I was drinking their Kool-Aid. And, it did start with Why Not to Buy Mutual Funds. That was the first book I read. And then, it just slowly progressed from there, from Think and Grow Rich to Cash Flow Quadrant, so on and so forth, just to, get a better understanding and open my opportunity and my paradigm. So context is a big thing because if I keep pouring information in, but I don't believe in myself and I don't believe I can do it, what's the point? Why add another book to it?
How long did it take you to feel like you had arrived?
That would probably be, my push was to get 17 properties. I would say probably in year 3 when it was absolutely crazy and I bought 11 properties.
3 years?
Yeah.
Okay. What was the change for you? So many of these things happen gradually. Again, we're here to educate and give some context to people, right? Of course, to give them something to think about, a roadmap or a mile marker. Doing it exactly the same way Paul did may or may not be realistic. Market changes, these things shift, etc. But you talked about mentorship, and I asked you, just it took you 3 years. I can tell you from being a business coach, it took me 4 to feel like I was getting there. I've been doing this for 8 years now. It took me to working with 200 clients before I thought, are they just humoring me? Do they continue to pay me every month because it amuses them, or are they deriving some benefit of it? So 3 years. So let's dial that down a little more, right? What was the catalyst, or how did you was it like a lightning bolt, or did you just kind of gradually dawn on you that as people were asking you questions or as you were navigating the next situation, you really didn't have to look for answers anywhere else an awful lot?
Yeah, it wasn't a lightning bolt. I think it was just that realization of, again, being in a place with other investors. We have a tendency to be more pessimistic than optimistic and down on ourselves that we're not doing enough. And I had to really put that into perspective and go, holy shit, like, wow, I have done something here. And for me, it was being able to really manage my clients, manage my tenants, manage my partners that were taking care of the properties. That's where I really felt, I'm doing something here. I'm really good at it, because I didn't have a lot of issues like other landlords were having. And that was just trying to be proactive rather than reactive as much as possible, because I knew this game. If you made a mistake, it's going to cost you thousands or tens of thousands of dollars. And I raised all of the money for these properties. I didn't have any of my own. My family didn't have my own. So I had to find investors to put into these properties. So I minded their money better than I would mind my own. A very stressful situation, and I didn't want to be that guy that lost their capital. So I was very hesitant and cautious getting into my deals. I had to make sure that the numbers worked. I had to have the worst case scenario worked out. And, if I can still survive under the worst case scenario. And then I had to be diligent in processing applications for rent. And, that's where the banking came in, is if you couldn't apply or get a loan, it was almost like you couldn't get the property. It just depends on the situation. But I looked at it as, I'm giving this person $1,000, $2,000 every 30 days. Am I confident that they're going to pay me back every 30 days?
Mm-hmm. What a powerful way to put it. Knowing you and your business. So this is a layup for me to ask you this question, and it's a layup for you to answer this one. But I want us to get a little more precise, a little more context to this answer. So if you had to start with just a handful of things, the major details that you got to watch with, how would you describe your process, or what people should really pay attention? We don't want to give away we don't want to give away the baby with the bathwater, meaning that too much information is going to overload people. We have a narrow window of time, but there are some key elements, key moments, or key parts that has to go into getting started here, and what people have to focus on to really to make sure that they aren't missing something. So what are those key steps, key components, key quadrants? Let's say if it was, I don't know, like a matrix or a ballpark. Like I said, gonna lay this one up for you, buddy. It's time for you to knock it out. But let's give people some context for what they should pay attention to, and what is going to help them build their little empire if they decide that real estate, as an example, is a place they need to go to.
I think it's an assessment of where are you at? What can you do right now? Can I apply and get a mortgage? Do I have capital put aside? Can I draw money from my mortgage and get a line of credit or refinance that? Do I have access of capital through friends or family or other relationships? And then taking a look and analyzing the market. Where do you live? The best place to mine property is in your own backyard. You subconsciously know it, and you know where the good neighborhoods are. You know where the not so good neighborhoods are. When you go walk your dog, and just even driving around, it's now your attention is on real estate. You're going to notice signs. You're going to notice realtor signs. You're going to notice for sale signs. You're going to just be more aware of that. So best to mine in your backyard, because you don't want to drive an hour back and forth. Been there, done that. It just starts to grind on you. You know where the deals are. You know what pricing is. So we know a lot more than we think we know. So it's about really just paying attention. Where am I at? How much money do I have? Start mining it. I call it mining property in your backyard. Start talking to other people who are in it, and start to become more conscious and listening. And that can be podcasts, that could be groups, that there's a lot of meetup groups that are out there in your local area with a lot of knowledge. And I think it's a journey. This isn't something to definitely rush into, but it's continuously immerse yourself in that. And then the other thing is buy a deal. Don't buy anything retail. That's where the issues and a lot of problems can come, depending on the market. I mean, if the market is going up 5, 10, 15% a year and you're in a hot market, yeah, definitely, the appreciation is there, the rent increase is there. But if you're in a standard market, you want to look for the deals. You want to look for the property that's $50,000 to $100,000 off. Are those easy to come by? No. You have to dig for those. You have to be quick into action, and you got to know what you want. And each market's going to be a little bit different. But usually the standard 1,100, 1,200 square foot, 3-bedroom bungalow with a garage is your standard no-brainer. Move it. Everyone moves in, everyone moves out. It's an absolute perfect property. There is the opportunity to have an up and down suite. And those are your utility go-to properties for the most part.
Mm-hmm. Mm-hmm. All right. And so people decide they're going to spend a little time, they're going to do a little research. I also heard you mention before too, and when you're talking about information mining for it, et cetera, you also did mention that you went and found a mentor right away.
Absolutely. Yep. I don't want to make mistakes that somebody else has already made. Why don't I follow in the footsteps? The path has already been blazed. Those mistakes have already been made. So that's going to shorten my timeline. But more than anything, it was concern of losing cash and concern of having to go back to investors and say, I screwed up. And I never wanted that to happen. So I was very cautious in that side. I'd rather learn from somebody else who's been to war than to try to go in myself and recreate things.
What's the biggest regret or biggest mistake you made?
That would be selling the apartment building. I wish I held on to that on that side. Yeah.
Why?
Because
what makes that a mistake for you?
Because it was something that was already cash flowing significantly. It had 85% of the property was already updated. It was a solid concrete building, walls, floors, ceilings. The whole construction was concrete. Would be very difficult to do today and very expensive. And just a great property when I reflect back on it. I mean, if I had to start it all again and I knew this knowledge, I would definitely go into multifamily.
Okay. A big win. What was
different game though? Different game, completely different game. And again, finding the mentors, finding the groups that are in multifamily, because residential is different. Condos are different. Apartment style condos are different. So you really have to pick which game you want to be in, because there's different there's different rules for buying, but there's also different rules for managing. And for instance, if you've got a condo and you have a condo board, you better be on that condo board. You better be on that condo board, because you have to have some sort of influence on that board. Or, they could try to do the roof, the parking lot, and the windows all in 1 year. And then, there's a levy of $20,000 per unit. So you have to bring some of that, your knowledge and presence to them to help them out, because most people on a condo board are owners. They own their own unit. They're not investors. They don't understand, that things cost lots and lots of money when you're updating a complex.
Mm-hmm.
It's not all about banana bread.
Although if you're in the right condo, I guess it is about banana bread, because those relationships are pretty good too. So, all right, let's get you to crow a little bit, and then we're going to start flipping over to the new asset for a moment. Actually, you know what? We're going to do two things. I'm going to ask you for what you considered a big victory, and I'm going to follow that up with, if you had to start again today, what would be your 3 or 5 or 6 action steps, the things that you do almost immediately to get a really good start? So let's start with, what do you consider a big win?
In what regard?
What do you consider a big win in your career in real estate? What do you consider one of your big wins? Victory. What do you consider?
Buying a house for $1.
Yeah,
that would be a big win. And we tend to go, that's never going to happen. When I was coming up in real estate, guys on stage from the US and everything were talking about that, and they're talking about more of the 80s, more of the early 90s, and the possibility of that was a lot higher. When I started in 2000. So possibility of that, because the market was booming in Edmonton and Alberta area. Possibility of that, I thought I'd never see something like that. And it just comes down to opportunity and putting yourself out there. You got to market yourself, and we would guerrilla market as much as possible. We would put signs out everywhere and have bylaw on us all of the time. It's better to ask for forgiveness than permission in a lot of instances. We would put ads in papers. We would put ads out and just try to continuously keep something rolling. And yeah, we were fortunate to actually find an abandoned property And, it came down to circumstances. This gentleman had gone down a tough road and, not only in life, but health issues. And he was actually in a different province when we ended up contacting him. And we sat down, and I think it was like a Kelsey's or a Chili's or something like that. And he was just so eager to sign that and get that weight and get that stress off of his shoulders. He didn't even want the dollar, but we had to pay it for the contract, and he still was trying to refuse it. So, you never know what you're going to come up with, and you're helping people, and in those situations too. When people are in struggling and in trouble, and you can have a solution, you can help them out of that solution, or you can buy them out of that problem.
Mm-hmm. Okay. If you had to start over, what would you do? If you'd start today, right today, that's it. Paul, that's it. You're all in. Time to start buying property. Screwed up market, not screwed up market, doesn't matter what it is. You had to start today. What would be those mechanics?
I'd buy a fourplex.
Okay. Why?
You can qualify personally. You can qualify under CMHC. It's classified as a personal residence. You just have to move into it. So not only do you move into it 5% down, but now you have 3 units that you can rent. So right off the get-go, you're in a multifamily, getting your feet wet, understanding what's involved on that side, and that would be the best thing to do, because you're minimizing the amount of cash that you have to put in, using the bank's capital. And that's what I love about real estate, is it's leverage game. Everyone's going, you only make 2-3%. Yeah, but that's on 400,000. That's on 500,000. That's on 600,000. And how much did I actually put into that property? 5%. So my returns are actually significant. And then we have to look at, my partners, which are the people that are renting, are taking care of it, and they're paying that down. They're paying that mortgage down. So that's the power of real estate, and that's usually the argument between stock investing or other types of investing compared to real estate is, you have to take a look at the leverage, and it's not a short-term gain. It's a longer-term gain. Like, you're 10 years in before you're really cash flowing. And that sometimes it can be earlier, sometimes it can be later. But if you looked at it and went, I can quit my job in 10 years or maybe 12 years. It's not, I'm going to buy real estate and quit my job in 2. Ain't going to happen for you.
Mm-hmm. All right. Now we're going to segue to the new frontier in investment as well. This magical word that for many people is still something they kind of see on the news or shows up on a TikTok or a YouTube or a Instagram feed, etc. Cryptocurrency, made up money on the computer. Somewhere in this thing, way off out there, is money. I can have it. I can buy it. I can invest in it. I can mine it. You said mining before. You can mine this stuff, right? So I can get my computer to make me rich while I'm asleep, right? That's what we're talking about. Just like real estate. I can start tomorrow and I'm going to get rich. So why don't you tell me, why don't you tell us, why don't you tell them just a little bit about the marketplace as well, and why I've got you on here talking these two is, once again, back to where I set the table. Cryptocurrency right now is a lot more like real estate than I think we give credence to than almost any other investment vessel or marketplace right now. There's a finite supply and amount. You're either all in and you understand it really well, you think you understand it, you're getting burnt like crazy, or you have no concept, and it is a dark and mysterious place to go to. The investing houses, and this tells you that it doesn't work the same way as everybody else invests with stocks or bonds or mutual funds, etc. Doesn't behave in a way that the average trader, the average investing house really understands. Why? They would have all embraced crypto a hell of a lot faster than they have right now. In fact, we're just seeing them coming in. So why don't you give us some context on cryptocurrency? And why don't you start talking people through just part of your journey there as well? And let's do the same thing we do with real estate. Give people some guidelines, so that if they decide they're going to get their feet wet, they're diligent and protected. Because once again, I'm watching you do this as well separately, and you're just as methodical with this as you are with real estate, which means that the caution and care that goes into it, if that's what makes best sense, and you did what you did before in a real estate environment, that likelihood, I'd have to guess, is going to return itself. So let's get started on that journey a little bit. What you're watching for, what you're seeing that's happening out there, and the steps and the mechanics you're taking so that we give people something to work with to go into this really scary place that is the internet of things with the imaginary money that is cryptocurrency.
Yeah, cryptocurrency based on a blockchain, right? So it can be kind of confusing to explain what a blockchain is, or how these things are created or mining. It's basically your computer, my computer, that are working on complex calculations to create a Bitcoin or part of a blockchain. And all it is it's a community. Think of it as an apartment building, right? You've got 40 units, and each of us are working on something. And then when it clicks and the calculation is good, the light goes on. And we need all 40 of those lights to go on to create that currency or that Bitcoin. Now, that Bitcoin is a virtual product, but it is a product because it's been verified by all 40 of us. So the big thing is the security of it. The biggest part of it is it would take an immense amount of power and money to break that Bitcoin, that certificate of authenticity. Now, you cannot duplicate that. You cannot recreate it. It's its own through those calculations of those 40. Now, there's way more than that, but I'd like to use 40 as an example. Now, in order for anything to change, we would have to get all 40 of those to agree. So now that coin is created, it can be sold into the marketplace. So it cannot be corrupted, it can't be copied, it can't be manipulated on that side. And if somebody tries, let's say they get to me, oh, I think that this guy's over here is real. The other 39 would reject it. So it's really creating an incredible layer of security and a stamp of approval. So I love that part of it because it's taking the guesswork out of a lot of areas going forward. So Bitcoin was the first one. We're hearing a lot more about others, but I'm just going to talk mostly on Bitcoin. So with that, only so many Bitcoin are going to be created. There is an ending time for the amount of Bitcoin that can be created. So only 21 million will be created ever, and no more after that. So how does it become a currency? How does it create value? It's no different than a piece of art. If there's enough of us over a period of time or in place that are willing to tie a perceived value to an object, to an item, then it does have value. And that is no different than the money that's in your pocket, because that paper money or plastic money has no backing whatsoever. We did used to be on a gold standard. We're no longer on a gold standard. So really, it's the belief of the piece of paper that has a number on it that has value. The difference is with Bitcoin is it's in the computer and we can't physically hold it. But it's exactly the same thing. Difference is no government can print it. No company can print it. Nobody can corrupt it. Therefore, it has more of a value like gold. Gold you have to mine. Gold you have to dig. Gold you have to put something into, and there's only a certain amount. Same thing with Bitcoin. That's where it becomes a currency and creates an entire ecosystem off of that. Now, the great thing about that, I believe, is that everyone on the planet with a phone can get in on this. today, right now? Where have we ever been able to get into a market without a lot of friction? Having to deal with the bank, having to deal with this, having to deal with that. Do we have to learn? Yeah, we definitely have to put some time into it. But it's still an opportunity for all of us. And like you said, Mitch, the institutions aren't even in yet.
To that point for a moment, and I've opened up CoinMarketCap. So we'll talk about research for a minute, because diligence in this space is just as important as it is in real estate. Now, if I can qualify one spot too for people here before I bring up Bitcoin in a moment, I can invest in this with $1. I can invest in this with $5. I can invest in this with $500. I can invest in this with $500,000. So cryptocurrency, for the very first time, and even Bitcoin, I don't have to have all the money in place to buy a Bitcoin. I can invest with anything I have. So I can start the path with $1. That has potency to it. So we talk about the contracted trust for a moment. Why would people invest in real estate? Why would people invest in cryptocurrency for a moment? If enough of us get together, well, here's the enough of us to get together all told. The circulating supply of Bitcoin as of right now is 18,864,737 Bitcoin, according to market cap. Right now, I'm staring at it. And in the last 24 hours, $31 billion in Bitcoin moved inside the marketplace for a total volume of 508,000 Bitcoin. Changed hands, moved around inside the market. So talk about why should people trust it? $31 billion in the last 24 hours moved around just inside of Bitcoin. And as I'm going down this list, Bitcoin's not even the biggest. On number 4 on the list, $76 billion in volume happened. So people are already investing in this, but people are already investing in that contract, which you spoke of earlier, and not contract like a piece of paper with a 9 sign at the bottom, but where you and I mean, we've got Scott and Danny on here as part of the studio audience, people that keep pinging in and out on YouTube as well. They've all entered into the agreement as well at some point. That's potent to understand. So where do people go to find the kind of information to make a decision whether or not it's valuable enough for this business?
Well, I think it's let's get a basis. Let's get a baseline. Let's start somewhere. Some of the great guys that I like to listen to, and what I got started with was Michael Saylor, and that's Saylor. He is big on Bitcoin, and has a large corporation, has an incredible background, and can break it down a lot better than I can in my explanation for what the hell is a Bitcoin and why is he so excited about what's happening. Another one is Raoul Pal, Raoulpal, Raoul Pal of it's gonna forget what he's part of, but if you look Raoul Pal up on the YouTube, you're gonna find everything on Bitcoin and Ethereum. He's heavy into Ethereum, and he's going to tell you why. And his background is actually with investing house like Goldman Sachs. He was a hedge funds manager. So he has come out of that Wall Street investment mindset and come into cryptocurrency. And he has a channel called Real Vision. So it's important because you're getting perspective from a hedge fund manager, from somebody who has been institutional, who looks, eats and breathes this stuff, and has come into the crypto market and goes, oh my God, have I ever identified a friggin' huge opportunity for everybody on this planet, and the banks and the institutions and the hedge funds are on the outside. His thing is, we have an opportunity to front run all of the big trading places in the world. Now, just think about that for a second. How big are these markets? How big is the Forex market? And how much is traded on a daily basis? Now, just take a percentage of that, take a percentage of that, take a percentage of stocks, take a percentage of housing, and put that money into the crypto market. That creates a giant wave. So if you have a smaller supply and more people are pushing in, what happens to the price? So that's what is to come. I love listening to these witty guys on it's called Crypto Banter. It sometimes feels like it's coming from their basement. They're rocking the t-shirts and the hoodies.
You had to bring them up.
I did.
Just as an aside for everybody on Syndicate Talks, I listen to their theme music start every morning in our hotel room. And we just came back from Las Vegas. We were all together, Paul and Matt Houston and I, all together in Las Vegas at this wonderful event called Undisputed Mastery. And we listen to that theme music every morning because I'm pretty sure it's Paul's alarm clock on top of watching these guys anyway. So Paul, go ahead.
Yeah. Awesome guys, down to earth. And, there to show you what the market is, and that there's more than just Bitcoin, right? We can go deep into the universe of crypto. And that's where it comes back to, have it on. You may not like the guys or whatever, but there's a lot of great information there. At the end of the day, it's great information. And the more through repetition and hearing these things and picking things up, the more you start to understand and piece it together. And it's really, what I don't understand, I'm going to say no to. So that's what you're fighting is, I don't know anything about it. I don't know this Bitcoin stuff. I'm just going to dismiss it. I think that's you're doing yourself and your family a detriment at this point. I think you should, at least take an honest look and see if it is for you, or to even reach out and ask. If you have a friend, family, or uncle, ask somebody who's 16, 15. They'll know more about it than all of us in this room about what's going on. They were raised in a digital economy. So for them, it's no big deal. Another great guy to follow who interviews them is Tom Bilyeu, Bilyu. And he has Impact Theory, and that's on YouTube. So you want to look for Raoul Pal, like I said. You want to look for Michael Saylor, and you want to look at Anthony Pompilo. They call him the Pomp on that. So if you go through that, you're going to see, the future of money. What is crypto? What is Bitcoin? Where are we going? And the philosophy behind it. So having a good base and a good understanding can get you up to the next level, which is tiptoeing into the marketplace and opening an account. And to your point, Mitch, $1, $5, this can be fractionalized into the smallest amount, so that it's not, I have to own one Bitcoin and spend $62,000 US to own it. It's no, I can put $30 in. I can put $100 in every month and dollar cost average in.
Okay. So let's give them a short little guide on, you've given them some great resources to go to. What do people need to get started in crypto? What do they need if they would decide they want to get into it? By the way, we also want to be able to identify very clearly once more, do your research and do it only with money that you are willing to risk, like every other investment. Real estate, stocks, bonds, mortgages, cryptocurrency. It is capital that you are putting at risk. 100% imperative to understand that everything, regardless of how good it looks, always has risk that's inherent. There is our caveat. There is our warning. You need to be comfortable with the amount of money you're willing to put into place, and you must be able to do the research. Otherwise, enjoy the casino lever pull, because you're just about as likely to win or lose.
Yeah, this is the Wild West. There are no security. There is no help desk. If you misplace your codes, you're SOL. You lose some things. So this is something to really slow down and understand the process, and then understand how things are done before moving forward, because you can lose your money, or somebody can steal your money, or you can invest in something. Just recently in the news was Squid Game, the movie that was blowing up all over Netflix. Somebody threw that up saying that they had the Squid Game coin, and it ended up being a scam. And $5.7 million is gone. So this is not a regulated market. This is where governments are looking to get in. This is why Wall Street, this is why the banks are on the outside, is regulation needs to be in this market in order for them to play in it. Is it coming? Yeah, we're starting to see ETFs released, but it's not a direct ETF. It's a futures ETF. So it's a paper market. It's not directly related or linked to Bitcoin, owning Bitcoin. So caveat for sure is learn about it. Stay in your lane. Ask questions. This is not a time to not be vulnerable in asking a question. You need to be, because this is something that's totally new. They have their own verbiage, they have their own terms, they have their own way. So it's almost like a completely different language. So just take your time in doing it. So pathway, you want to buy something, you got cash in your bank, you've got a Visa card, you want to know, first is geography. Where are you living? Are you living in Canada? Are you living in the US? Or are you living somewhere in the world? Because there are some restrictions in the United States, there are some restrictions in Canada. So one of the ones that I use is crypto.com. It's easier for me to actually just transfer the money in. I don't need somebody else in between, so I can put it into crypto.com. And through crypto.com, there's a list that I can buy. There's also Binance. You got to make sure that you're doing the Binance for your area. These are going to be markets that you can trade in. And then once you get into the DeFis, then you're going to have to start looking at different ones and different exchanges. And that's where it gets tricky. This is something that, you have to do it 10 times before your brain goes, I know my brain at least is like, oh, okay, these are the steps. Because again, there is not a detailed how-to. There are Reddit groups. There are other, forums out there to help out. There are videos on that side, but you're going to do more digging if you start to get to the DeFi stuff. And all DeFi is it's just a different blockchain. You've got the big boy is Bitcoin. To me, that's the sun in our universe. We follow the sun. Wherever Bitcoin goes, wherever the sun goes, we go. And then there would be Ethereum, which would be Jupiter, the other biggest planet in our solar system. And then you have other ones that are, like Ethereum that are cropping up. So think of it as a universe or a solar system. And, you have things that are built off of that, or I call them moons, right? Moons kind of orbiting that Ethereum planet.
Perfect. All right, ladies and gentlemen, you got to do research. You got to spend some time and some energy. You have to put some diligence in, and you have to find somebody that knows more than you, so you can at least have a good conversation. Invest in research, invest in education, spend some time, do some diligence. And like real estate or like cryptocurrency, do not invest more than one, you can afford to risk at any given time. And two, do your homework. If you are inside of the Cyndicate community, go ahead and book a conversation with Paul and ask really smart questions. He'll provide to the best of his ability the best advice, suggestions, and his life experience as he has begun to navigate this cryptocurrency marketplace and has spent years navigating that real estate marketplace as well, to give you the benefit of wisdom, success, and failure. Because as you've heard here today, just listening to Paul, there's as many losses as there are wins, but the wins can make an incredible difference for you in your life. And those are the ones that you're chasing, but you have to get it right the first time. Paul, we spend so much time together, but inside of our syndicate community, thank you so much for sharing just your journey coming into it as well, providing some educational format. Be very conscious and conscientious. Paul learned by making mistakes, but more importantly, he learned by investing in education and other people that had already had some measure of success in this and asked really smart questions. Do that, because your opportunity to advance, accelerate, grow yourself, your business, your money, and your life is present for you right now. No other time, much like why we started Syndicate Talks in the first place, has never been more readily available than it is right now, thanks to this thing. Pick it up, use it to learn, use it to get better at what it is that you're doing. But remember, there's risk inherent in everything that you do, and you need as much education, information, insight as you can do. Paul, thank you so much. With that, Syndicate Talks Season 3, Episode 4 is now in the bag. Check out Season 1 and Season 2, available on YouTube. Syndicate Talks, first 3 episodes, and this episode, which is now live, of course, on YouTube, available. Welcome and thank you to a Syndicate Talks. It has been a pleasure and a privilege to join you today. Invest or die, real estate, cryptocurrency with Paul Falkowski. Paul, thank you so much for being able to do this with us as well. Watch for the next episodes coming up. We've got 5 more in Season 3. And then in the new year, in 2022, we will be starting Season 4 as well, where the smart people, the best and the brightest, people that are experts in their own industry, are going to share their intelligence, acumen, and experience to make you better at business. Ladies and gentlemen, thank you so much. Tribe, it is a privilege and a pleasure as always. Check out the next episodes, check out the previous episodes, and we will see you next time on a